Hey guys, and welcome to the Working Money Channel. From Michael Branch here on Twitter, we haven't left the bubble. Wall Street's elites investors are privately warning that the stock market is headed for a second wave of pain. Privately warning, huh? So elite investors are privately warning that the market is headed for a second wave of pain. The stock market has started off the year in a state of euphoria, struggling off the anxieties of dominated investors' minds over the previous 12 months. Inflation, hot war, cold war, soaring interest rates, and recession. So the good news is undeniable. I get that. A milder winter in Europe has kept energy prices low. China is reopening from the economic standstill that was, in fact, dubbed zero beer flu. And the U.S. economy is stunning everyone with its resilience. Here's a quote, guys. The economy is booming now. One legendary hedge fund manager told me via email, citing the 517,000 jobs created in the U.S., that is not what a recession looks like. But this elation has lulled Wall Street into a false sense of security, according to the investing world's elites who I've spoken with over the past few weeks. Privately, these market makers warn that this complacency can make the coming reversal even more excruciating. Basically, what these guys are looking at are market trends. And, we've been talking about this. This is no secret. The market is looking very bearish. If I bring up the DJI here on the weekly, you guys can see no new highs have been set. This is since January. So this is since the beginning of the month. Again, this is on the weekly, retracing up to the 702. And what does that mean? Generally more pain before we see more gains. So lower highs, lower lows. Bringing up the SPY, the spiders, same kind of thing. No new high has been printed since January of 2023. This is January of 2022. I just saw January down there. I assumed it was 23, but no, this is 2022. This is the weekly chart, not the daily chart. So a year of bearish movement. And I mean, if the narrative is positive, people are going to get excited. Unfortunately, people do not pay attention to charts as closely as they should be. And guys, here's the NASDAQ. The tech sector has actually taken a huge hit, even though it did retrace up here, almost getting back up to former all-time highs. It didn't quite manage to make that. Now it's looking like it's going to be making new lows. I mean, right now, we really don't know in terms of the tech sector and how they're going to react. Technically, we're seeing higher lows and higher highs for now, but ultimately, though, I think this is the big, the big move here that we should really be looking at. Lower high, and I'm assuming we're going to end up down here somewhere. That big move, boom, 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 lower low. Let's also not forget, right in here, it did retrace to the 0.702 back in August. So we got to take a look at the markets. We really got to get an idea of where this is going. Luckily for us, the cryptocurrency market's still staying relatively robust. Bitcoin here up to 23,800 as of the time of this recording. Hasn't really been moving in the same fashion as the rest of markets. We've been seeing bullish momentum for cryptocurrencies like Bitcoin since the beginning of the year. Bitcoin is up almost 45% since January, whereas, I don't think we can say the same for other markets. So, this just kind of proves my theory. Don't do as they say, do as they do. We have not left the bubble yet, guys. This is elite investors saying this privately, so they're not even saying this on mainstream news. Be aware, stay vigilant, and keep your cryptocurrency safe. I always say that because you never know. Keep it safe in cold storage, guys, like a Ledger Nano or something similar. Again, I have an affiliate link in the description. If you still have yet to purchase a Ledger Nano, you can use my link. You don't have to use it. It's just there essentially for ease of use. It is positive to see this, though. Rosie Rios recently did a talk in India talking about emerging markets and where the money is flowing. So if you're afraid, of traditional assets, I would personally take a page out of Rosie's handbook. Listen to this.
What would I do as an investor? One, I would follow the money. Yes, it is my name on U.S. currency, almost $1.8 trillion with my name on it in currency in circulation, so no one has made more money than I have. But if I were following the money, where is it going? It's going to the metaverse, it's going to blockchain, it's going to artificial intelligence. Technology and innovation will be the key. And here's what's important to remember. In 2007 and 2008, we saw a huge growth of investment in technology and innovation. This was during the downturn. What was invented in 2007 that has turned our world upside down today? Anyone? The iPhone. Very good. The iPhone was invented in 2007. There is no doubt, and then obviously subsequent to that, you saw Facebook, you saw Google, you saw Airbnb, you saw Uber. In one of our biggest downturns, innovation still mattered. And that's going to still be the case. This is a very resilient global economy, and a lot of that innovation is happening here.
So, according to Rosie Rios, we are still in a very resilient economy, likening it to the 2007-2008 bubble, where we saw, it's the mortgage crisis, where we saw markets plummet. What was that thing that got us out of it, and what was the thing that turned everything around? The invention of the iPhone. I know it sounds silly, but it was really that technology that kind of transformed everything from the late 2000s onward. Okay, then social media became more popular. We started using our iPhones for many different purposes. I'm sure you guys have seen those graphics where, there's a table full of 1970s and 80s and 90s technologies sitting on a desk. And then beside it, somebody has an iPhone and, cheekily insinuates that, all these types of technologies is now available on one piece of technology, on one iPhone. So the point she's trying to make here is follow the money. Where's the money moving, guys? Artificial intelligence, blockchain, and the metaverse. So obviously we can extrapolate that. Blockchain, cryptocurrencies, crypto projects, fintechs. The metaverse too is also being built on blockchain to some capacity. And AI, another subsector in the tech industry. So where's the money flowing to? These innovations. This is where we should be putting our money, guys. And this is why I'm betting long on cryptocurrency. And again, some of the coins that do solve problems, some of the coins that will be providing value. When I talk about the daily partnerships with whether it's Ripple or Algorand or VeChain or whoever, it's this that's really going to make up the future fabric of our world, and this is why I'm really excited about a lot of these different projects. Anyway, wanted to thank Riz XRP for posting this. I guess I should also mention Rosie Rios is on the board of directors at Ripple, if you did not know that already. But alas, of course, there is still Gary Gensler and that dreaded SEC, James K. Filan, bringing this up. The WSJ, or the Wall Street Journal, discusses Gary Gensler's latest efforts to exert control over all of crypto. The more and more I'm looking at this, though, guys, the more and more I'm thinking this is just for show, and this is, kind of the necessary teething pains, or not teething pains. What is the word I'm looking for? Going through the motions, I guess, is the best way to explain it. The necessary motions in order to get crypto drilled down. I mean, it's causing us a lot of anxiety, but I feel like behind the scenes, they kind of already know where this is going to fall and where this is going to lie. The SEC's lawsuit over BUSD, so they're talking about stablecoins here in particular, and that's the latest stablecoin that they're going after. They're cutting off the ability of some crypto middlemen to offer lending services, so going after the exchanges as well. So again, I just kind of wanted to bring you guys this article. If you guys do want to read it, I will link it in the description. Basically more of the same though. Cryptocurrencies, in this case specifically stablecoins, is now what is in the SEC sightlines. It's what they are targeting. Stablecoins are a form of cryptocurrency that make it easier to trade other digital assets, as we know. They trade one-to-one to fiat. Traders can use stablecoins as a store of value or use them to pay for other digital assets. And I think that is the pain point for the SEC and the US government. They do not want us to use stablecoins as an alternative mean of fiat currency. They want to take that market share. They want to do that with central bank digital currencies. And this is why we're not just hearing it from US government. We're hearing it from the Canadian government and governments in Europe and governments all over the world. Cracking down on stablecoins, I think, is their key, or at least they see it as their key to keep fiat dominance prevalent in Western countries. In Western countries specifically, I don't really know what's happening with stablecoin regulation in Asia or the Middle East specifically, if they're cool with fiat-pegged stablecoins and, in what kind of capacity those can be traded. But we see a clear mandate to crack down on this in the United States, unfortunately. Anyway, wanted to thank James for posting that. Want to keep moving because Gary Gensler, the man behind the SEC, is really the focus, is really the pain point here, considering he's the head guy. Well, Weezy at Nerd Nation Unboxed posted this. I will be posting here as I find it. If you need a link, let me know, and I'll search for it. Pywawar, okay? Who is it? Michael Pywawar. He wanted to purchase crypto, but was told no by the ethics department due to the uncertainty of not knowing whether these were securities or not. Listen to him describe his experience down here.
Hello, my name is Connor Riley. I'm with the Cato Institute. I was wondering, how would you guys say not being able to own or interact with crypto has affected your education process, and then trying to regulate it? Because to me, just using this stuff is the best way to learn about it.
Well, before you answer, I'm with you. When I was a commissioner, I wanted to get ethics approval to own crypto, and they wouldn't let me own it. And I said, well, why not? And they said, well, it might be a security. I'm like, is it? I'm like, we don't know yet. And I'm like, well, should I be able to do it? So I am with you. So, all right.
Sounds like Pywawar is on our side here. Get this. Okay, this tweet was originally tweeted out by Weezy in October. Pywawar was commissioner from 2013, January 20th, 2013 to July 7th, 2018. So in and around that same time period that now they're questioning the sales of XRP. Things that make you go, And I don't know who originally posted it, but do you guys remember that there was a document floating around too that SEC officials were actually actively trading XRP in and amongst the same time where we were questioning Gary Gensler and Jay Clayton's motives? So why was it that they were allowed to buy and sell XRP? I think the SEC wanted to keep that hidden, but it did come out during the court case. Anyway, I don't have that document up here, but I do want to remind you guys of that as well. So wanted to thank @NerdNationUnboxed for posting that. Also wanted to bring this up, guys, from John Deaton. This underwriter issue is what many fail to recognize why I sued the SEC. If you guys don't know what he's talking about, let me outline this, okay? This is, I believe, from the SEC's filing. In the footnotes, okay, Ripple finally sold limited amounts of XRP to ODL users in the last half of 2020. However, the ODL users immediately resold the XRP into public markets in order to avoid any investment risk exposure to the asset, thus acting as conduits or underwriters under the law of Ripple's sales of XRP into public markets. Thus, Ripple also violated Section 5 with these late-stage offers and sales of XRP. So the SEC going after Ripple for these late-stage sales, or the underwriter sales, I guess we can call them. John Deaton says an underwriter is any person who has purchased from an issuer with a view to, and then it goes on, the distribution of any security. This could mean that anyone with intent to sell and distribute XRP is barred from doing so. So there's also this underwriter comment here, and this is why John Deaton did sue the SEC. I mean, they're really trying to nail Ripple down in every way, shape, and form. Luckily, there's so much more evidence to suggest that Ripple was in the right, that XRP was never treated as a security. And even if the SEC could argue that the security sales, the early sales were that of a security, I think we are still going to come out this gloriously and victoriously. Maybe not in the way we thought, but again, I guess we're still just going to have to wait. Funny, considering the SEC has been flip-flopping on Ethereum since even before day one. Check this out from Gary Gensler's time at MIT. Who changed your mind, Gary? This coming from Real XRP Boy here on Twitter. And Gary Gensler's opinion on Ethereum. Listen to this.
There was a gentleman in Florida that put up citrus groves and started to sell them. And the Supreme Court had to decide what is an investment contract, because an investment contract is a security. This four-part test, in my mind, suggests that most, maybe not all, but most initial coin offerings are securities, because they're investment contracts where there's an exchange of money, there's a common enterprise, you're relying on somebody else's expertise for profits. And this is why I've earlier this year said I think that most of them are. I think Ether, when it was done in 2014, would pass this test. When I say pass, it means it's a security.
Whoa! Ethereum passed the test in 2014, deeming it a security. Meanwhile, the SEC now offering protection to Ethereum and Consensus and all those guys associated with the Ethereum Foundation because of their big banker buddies, the legacy service providers that want a big chunk of the pie. And obviously, this is the theory, that many of us in the XRP community is talking about, why Ripple's being held back as well. So anyway, wanted to thank Real XRP Boy just for bringing that up too, because this also kind of rattled me a little bit. Oh my God, look at this from Mr. Hubert here on Twitter. Gary Gensler is sitting here in the audience. Okay, guys, asking questions about Stellar and XRP, and MIT is teaching demonstrable and blatant misinformation. You can't make this stuff up, guys. The lecturer says Ripple can freeze funds on the XRP, which is not possible with Bitcoin and Ethereum.
That Ripple or Stellar actually run the nodes? Because I understand that they might sign off on the UNL. You're saying that
in Ripple's, at least like a year or two ago, they may have changed that. I think they're trying to, but in Ripple's case, yeah, they ran their own Ripple nodes.
So it's not the bank partners or anything.
They may have some. But they may now. But I know that 2 years ago it was just Ripple, or majority Ripple. They basically, because they also put in things like they can sort of freeze funds. Because Ripple got in trouble with FinCEN, and part of the thing is they modified their code to be able to freeze people's funds if they did something bad. That's definitely not something that the Bitcoin developers or even the Ethereum Foundation. It's not as direct anyway. The Ethereum Foundation sort of did freeze funds and move them against the rules of the system in the case of the DAO, but that was in a lot of ways with support of a lot of the people running Ethereum. With Ripple, they can do it sort of, without much brouhaha. They just sort of freeze these funds.
Whoa! Ripple can just freeze funds? That has clearly not been the narrative from Ripple, obviously with more decentralization. Considering Ripple does not run the majority of validators, they do not have control. And I got to give him credit. He does preface this with this was before. However, a lot of what he's saying here is just not true. You can't freeze anything on the XRP ledger. It's an open source ledger. And guys, this was a course, MIT Open Courseware. I don't know if you guys can see down here. I'll try to punch in on that so you guys can see that. This is an official MIT course that was taught here. And you guys could hear Gary Gensler right at the beginning asking the questions. So very, very interesting to note that even before Gensler was at the SEC, this misinformation about Ripple and XRP was already being taught in these MIT course lectures. Things that make you go, So, over the last few days now, we've been talking about David Schwartz's tweets and, if this goes to the Supreme Court or, the possibility of, Ripple having to maybe hand over the escrow that they have been holding for this long. All this is getting me wondering, will we see a burning of the escrow? Will we see the escrow, being held in perpetuity? Will we see the SEC take control over? There's so many possibilities here. Wheezy at Nerd Nation Unboxed also bringing up another possibility. And again, guys, just a possibility, nothing set in stone. He says, let's just say that the SEC makes Ripple burn half of the escrow as part of some sort of settlement. Again, just a hypothetical, so just hear me out. If XRP gets the market cap of Ethereum and or the market cap of Bitcoin right after the settlement, these are the possible figures we can see. So if we get the, this is by the way from market cap of, and it shows you guys just, if one particular coin gets the market cap of another coin, what the price would be of that coin. So if it got the market cap of Ethereum as an example, we could see XRP go to $7.40, no problem. That would be an 18.64 times increase. Okay. If we saw it get the market cap of Bitcoin, however, $17.42 per XRP, that would represent a 43.88 X increase in XRP price. So some interesting speculation here. Of course, we don't know what's going to happen. I don't doubt for a second, though, that XRP could pump in price to those valuations. Again, guys, the crypto market cap is at $1 trillion. We're expecting a $10 trillion market cap when this is all said and done. XRP is likely going to share the stage, but once we do see real-world utility flowing through it, an organized and regulated structure for XRP utility, I have no doubt that we could see double digits and even triple digits for XRP because these market caps are going to move. They are not going to stay this low forever. Also, let's not forget, guys, this from the Archer here on Twitter. If you take a look at the rich list, if you're an XRP holder, you are in and amongst about 4.5 million holders. And let's not forget, this number is very conservative. It's likely a lot lower than that. Think of it. How many XRP wallets do you have? This is just the number of XRP wallets that are currently active. So this number is a heck of a lot less when it comes to individual XRP holders. We are certainly in the 0.1%, guys. Remember, follow the money. As per Ripple board member and former treasurer Rosie Rios, the money is moving into blockchain, crypto, fintech. That's where we're going to see our returns. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.